So first and foremost, shout out to all of you guys that were able to answer the questions. Everyone was right in your answers in the bullish thesis and the bearish thesis. What was my game plan for this homework assignment was for you guys to be able to create confluences. Confluence is the combination of multiple strategies and ideas into one complete strategy. In technical analysis, a confluence is created by combining multiple indicators, levels, or strategies to identify possible opportunities. Confluence typically requires several indications of a buy and sell signal combined together to affirm a trade decision. The most ideal trade is the one where you have about 5 to 10 confluences. Wait, 10 confluences? Yes. 5 to 10 confluences. It's fairly easy to get 5 to 10 confluences once you start getting familiar with the strat, actionable signal, OTE, and these trading strategies that can help you become better. But going back to confluences, let's talk about what I mean when it comes to SMH. So the first thing I noticed, and I'm just going to take off these drawings real quick, prior to us even with the actionable signal, look at SMH on the macro time frame. Just zoom out, right? You can clearly see that SMH on the higher time frames took out buy side liquidity. For those that trade ICT, buy side liquidity, or we made a higher high. 2-2 reversal on the 2-month. You can even mark this as entry for the downside. Based off the 2-month chart, we know, because you trade the strat, that a 2-2 reversal, the price target for the 2-month chart is here at 120.94. But we know that the possibility, based off the fact that the actionable signal is about to trigger, once it does trigger, we know that is a possible price target for SMH on the 2-month chart. We're getting a new quarter in 2 weeks, right? I want you to think of it like this. If SMH were to close, let's say this is the last day of September, right? And SMH closed like this on the quarterly. Do you see how the likelihood of you triggering a 2-2 reversal to the downside on the quarter is significantly higher at this level, because you're literally closing at the low of the quarter, right? So because we're closing at the low of the quarter, next day we're literally 1 cent away from triggering 2 down on the quarter, right? And so what would that trigger? That would trigger a 2-2 reversal on the monthly. If it does trigger a 2-2 reversal on the monthly, you guys know what a shooter looks like. This is the potential price target for SPY on the 3-month chart, which is at 118.57. It's not SPY, SMH at 118.57. You have a shooter as well, and it's a bearish shooter, right? Sitting at the lows. So we know that the likelihood of triggering that 2-2 reversal is higher compared to if price was at a doji or a hammer on the quarter. So far I've talked about the 2-month chart, I've talked about the 3-month chart, and I talked about the fact that we hit buy side liquidity / broadening formation. So those are 3 confluences so far. The month, pretty much the same thing as a 2-month chart. That was the entry for the monthly candle to go 2-2 down. The monthly candle tells us that if you trigger a 2-2 down or a 2-2 down on the month, your potential price target is, according to the strat, would be this low right here. Why? Because you're already below this low. So this would be the next low according to the strat. So that's 4 confluences based off the monthly, that if we trigger this trigger, potential price target is at 120.94. Let's go to the lower time frames. Someone mentioned the 9-week chart, 2-2 reversal on the 9-week. Notice how that's the same thing on the monthly, 2-month, and 3-month. Or 3-month hasn't opened up yet, but you get what I'm trying to say. 8-week, same thing. If you guys don't know what I mean about the 3-month chart doing a possible 2-2 reversal on the 3-month, look at the 8-week. The 8-week has the same candle as that 3-month candle. So that's what we're looking for potentially on the 3-month. If you go to the 7-week, someone mentioned 2-2 reversal on the 7-week. SMH on the 6-week chart, you triggered a 3-2 down. You guys trade the strat. What is one of my favorite signals, or what is one of our favorite signals? The 3-2 continuation. 3-2 continuation to the downside on the 6-week, 5-week chart. Same thing, 3-2 continuation to the downside on the 5-week. That's, what is that, did I say 5 confluence? Yeah, that's number 6. I can give you a 7th confluence. Look at what SMH did on the 5-week chart. Look at this inverted shooter on the 5-week, right? We know that if you guys paid attention to the candlesticks and chart patterns lesson, we talked about inverted shooters and inverted hammers at the top and the bottom of the broadening formation. SMH is giving you an inverted shooter at the top of the broadening formation. So we know that is a downside signal as well. That's 7 confluences. And we haven't even gotten down to the lower time frames, talked about gaps, talked about OTE or full time frame continuity. 4-week chart, 322 down on the 4-week. We know that's a actionable signal. 3-week, a 312 triggered on the 3-week. You guys know about the 312 see you later, right? So we're setting up for a potential 312 see you later on the 3-week, and we have a new 3-week candle opening up on October 2nd. Not only do we have a 3-week candle with a potential 312 see you later, where is that 312 coming off of? It is coming off of an inside shooter on the 3-week, indicating bearish sentiment, right? So that's 8 confluences that we just talked about. 2-week chart, you got a 2-2 reversal on the 2-week. Weekly chart, just a 1-2-2 continuation. I won't even count those as actionable signals. So let's just say that we're still at number 8, right? Not only, what else do we have? We have full time frame continuity to the downside besides the year, confluence number 9. We also have the fact that we're breaking a very important demand zone. Someone mentioned how we're and support level. So you guys mentioned how we're at a very strong support level, looking at the daily and look at the weekly. Well, we just broke it, right? So that would be confluence, because we know if we break demand or we break support, that support or demand can eventually become resistance. So we know that is confluence number 10. If we have break that support, that would be in the favor of the bulls. Now, let's talk about the daily. We didn't even go into the 2-day, 3-day, 4-day, 5-day, 6-day yet. The daily, 1-3 day, or we had an inside bar yesterday. Inside bar is an actionable signal. If we have a 2-1-2 down on the day, we know that's an actionable signal that can take out that monthly pivot, which what happened? Did it today, right? You also have multiple gap fills to the downside. You got this gap right here. Boom, from 136 to 129. And you have this gap, the one that I'm targeting. Shout out to HT, 141.79 to 140.46. HT said that 146 could be a possible support or a possible resistance to retrace back up. Why do I agree with her? Because 140 is that liquidity or that gap that we need to take out. Okay, here's it right here. Let me exit the bar replay mode so you guys can see. Where are we right now? We are at 141 and we have about 50 cents left, 54 cents left for us to take out this downside gap, right? And that's that 140 price target that I am looking for. We know 50% of the gap fill things can reverse, but until proven otherwise, especially because of the fact that we broke these macro time frame trend lines, macro time frame actionable signals to the downside, that is why I have about 9 to 10 confluences for the downside move. I also wanted you guys to have a bullish thesis as well. What was a bullish thesis, at least for me, coming into today? You guys talked about the demand zone for SMH. True, you are right. That demand zone was around this 142, 143 level. We bounced here initially one time, we came back to 143 a second time, and we could have bounced here another time. So this had been, or at least was a support or a historical support, and this was the level that buyers can look to take back up. If this support held, then we could be looking for another TTO to go back up, because we know those support zone bounces are very important for the upside. But since we didn't hold the support, now we're looking for the support zone to turn into demand. As of right now, the only confluences that I had to the upside for SMH, or at least for yesterday, was the fact that you had this monthly support that if you didn't break 2 down on the month, you can possibly get a reversal to the upside. Same thing with the daily support. And you also have a possible broadening formation that you can tap into right here at this level. But this broadening formation says you have an opportunity to go all the way down to 135. All right. So those are the only confluences that I have for the upside. I had about 3 confluences for the upside, and I had 9 to 10 confluences for the downside. But the downside confluences also featured full time frame continuity to the downside. So usually when it comes to me picking my bias, I usually pick the one where I have most confluences for, and if it's in alignment with full time frame continuity, that's usually the side that I favor the most. When you see a chart, you want to look at the macro time frames first. You want to take it back to the 3 month. Okay, take it back to the 3 month, take it back to the 6 month. This is a possible double top on the 3 month chart. You broke buy side liquidity. So you made a higher high, went to all-time highs, and we know just a function of price action. When you make a higher high, you have a chance to go lower, right? And the risk to reward is higher if you go lower. Then I go into my actionable signals, see what they're triggering on the higher time frames, look at those possible price targets on the higher time frames. Then I go to the lower time frames, see if they're also matching up, seeing if I'm getting actionable signals on the lower time frames, looking at my gaps, looking at possible OTE entries, marking all your broadening formations, playing in alignment with full time frame continuity, and then that's how you can come up with your bias when to play. Always make sure you have your invalidation level no matter what, but make sure what is the reason why, or ask yourself what is the reason why you're taking this trade. Is it based off the weekly? Is it based off the 2 week? Is it based off the 7 week? Is it based off the quarterly? Because if you're taking it based off the quarterly, then you're thinking of a bigger move, right? It's not going to get there next week. It won't get there in 2 weeks. It will not get there in a month. It may not even get there in 2 months. It could even take up to 4 or 5 months, because they may give you a 2 down for this quarter, but not take it all the way to target. And then the following quarter, it actually goes to target. You can see what I'm saying? So that's why it also depends on what type of participant you want to be. And that also tells you what type of contract you should possibly get. So good job on the homework. All of you are right. Bullish bias and bearish bias, 100% correct. The more confluences that you have for a trade, usually that is the one that you should be confident in, because you want to not rely, but you want to trust that you are actually able to understand price action and the reasons why you think this trade or price can go to this level. Good job to all of you that did the homework. I will continue to be posting these homework assignments. I want to do it like weekly, so I will continue doing that.